Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Chris Vermeulen of the Technical Traders. Obviously, we are heading into the end of the year, the end of 2025 and into 2026. So today we're going to dive into Chris's perspective on the markets. How you doing today, Chris?
I'm good, Darrell. Thanks for having me. And yeah, it's going to be exciting to see if the Santa Claus rally kicks in. I think it's here for the precious metal space, but will it be for equities? We'll find out.
Yeah, for sure. Let's dive into that. So I'm curious about the Santa Claus rally. I hear about that every year pretty much, but then you have this tax loss harvesting event as well, where markets typically can sell off, or folks take profits on positions, or they sell to losers and such, and then you can get them at a steep discount. And so just curious in your perspective on that.
Yeah, I mean, seasonality wise, we tend to see the markets rally into the end of the year, but I think it does come after a little bit of a pullback and pause in the equities market. I think some of that has to do with the tax loss harvesting. If we take actually a look at the charts real quick, we can actually see kind of what I think is probably the tax loss harvesting. If we pull up the seasonality chart for not only the S&P 500, but we'll see the same in gold here. You can see here in December, this last vertical bar here is December. We tend to see some selling in about the middle of December. And then from here on, once people have rebalanced and they're getting ready to go on holidays and things like that, then the market naturally wants to go higher. People are in a good mood. They've already done their selling for the year. And so that's where I think we are. And it's similar for gold. Gold tends to see a little bit of a pullback in December, and then it starts to move higher and run up into the end of the year. And so I think that's what the markets are going to want to do. The equities markets as a whole are primed and ready for another move to the upside. But yeah, that's kind of my take for the end of the year kind of rally here.
Yeah, got it. Okay. Yeah, that's good to know. So looking at the S&P, so right now you have the S&P up. So what are your projections for like next near term targets? So obviously the S&P is already at all-time highs around in that range, and so just curious in what to expect next for this particular indice.
Yeah, now we had a really strong rally come out of the November lows over here. And if we take using Fibonacci extension, we can get an idea of where this market should run to the upside over the next week or two. And based on this chart pattern, it is showing about a 5.5% move in the S&P 500. And that's the same for the Nasdaq. It's roughly the same. And that move is based on this rally up, this pullback, and then, of course, the second half of that move up to this level. So around 7,200 on the S&P 500. Now, there's this big red candle here. There's contract rollover. So I didn't pull off that high. If we go to the SPY ETF, it kind of shows a little bit cleaner of a chart where the market came up here and pulled back. But it's the same thing. They both are the same opportunity, same index. But we're looking at potentially a 5% rally in the markets. And it could happen really going right into the end of the year in the next week and a half or so. Just look at this past rally. It was a 1, 2, 3, 4, 5 days, and we saw a very big percentage move. And so the market looks like it's carving out a low. We've seen a few things recently on the stock market. We've seen this lime green light up on our 30-minute chart. And this is just over the past couple of sessions. And the lime green means price has fallen too far, too fast. It's getting oversold. Usually bargain hunters start to step in. And on top of that, we've seen a little bit of panic selling take place in the market, which was a little bit of a low here back on December 16th. So the market right now is trying to stabilize. It needs to find a bottom here. And if it does, then I think we're going to see a pretty decent year-end rally.
Okay, got it. Yeah, that's makes total sense. So what about the Dow? So I've been looking at the Dow and seeing news with the Dow, and it's been kind of performing up whenever the S&P's down and such. And so just curious what you're seeing there.
Yeah, the Dow's a different basket of stocks. It's been performing fairly well, pushing up, and it has a high momentum move. It looks like it still wants to push higher as well. We can use a couple different targets. The most conservative target would be just based on this last run, just this little pop and this little bull flag pullback. It's showing that we go to 50,100. if we were to kind of base it off a larger pattern, and we just go down here, if we were to base it off this initial first rally and pullback, it's showing about 50,700. So there's still some upside potential across the board. It doesn't matter which indice. The Dow's already leading the way. It's already kind of broken out and moved higher. So I think some of that potential gain is already gone. It's showing about 2%, maybe 2.5 or 3%, depending on how the market moves, versus the S&P 500, which is about 5.5%. So again, each indice will have different potential volatility, and we've already seen the move, a chunk of the move already done in the Dow. So hopefully the S&P 500 and Nasdaq will follow suit, but that's going to come down to the Magnificent Seven, I think, which they don't have. A lot of the Magnificent Seven don't have the sexiest looking charts.
Yeah, we're going to get into that here shortly. So one last indice I want to look at is the Russell 2000. Obviously, they have a lot more smaller cap, mid cap stocks, and so just curious what you're seeing there.
Yeah, well, we've seen money definitely moving into the small caps. It's hit some highs here. It's been pulling back with the overall broad market, but it's been performing very well. The small caps and also IWC, which is the micro cap basket, they move very similar. And money has been moving into these small and micro caps, and that's telling us people still want to take risk. They're really moving their money in. They want to attack the high growth, high potential stocks. And this is where I think money has been going. We've been seeing money moving into the Russell and the micro caps, and more so away from the Magnificent Seven. And Magnificent Seven has lost its shine. NVIDIA has lost its shine. So has Bitcoin. I mean, I think we're seeing a change. We're finally seeing a change where people are giving up on what was hot, and now they're looking for something fresh, something new going forward.
Yeah, for sure. And I wonder also with the small cap sector, the Fed's still cutting interest rates, and they just pivoted on the quantitative tightening. Mm-hmm. And so I was kind of curious how that's beneficial for the smaller caps if borrowing costs are cheaper or whatnot.
Yeah, I mean, it's definitely bullish for stocks across the board. Small caps can be very highly sensitive and move very quickly to it. So I think we've seen some of that. In the last week and a half or so, we had the interest rate cut. We had Oracle come out. We had Broadcom come out with some kind of negative news. There's a lot of mixed signals in this market. Some of it's good, some of it's bad. We're in a really volatile stage, and this is typically what happens near the market when it starts to get exhausted. And we're seeing, I think the market's been exhausted for a while, but we're really starting to see things change. Now that the Magnificent Seven's losing its shine, I think we're starting to see some real exhaustion in the market. Because even though a lot of other stocks have been exhausted for a long time and don't look that strong, the Magnificent Seven have done all the heavy lifting. And so and of course, precious metals, all shooting higher, are definitely a warning sign saying, okay, something bad is happening. It's just, when will the stock market, when will the economy data turn, right? But right now, gold's just saying, prepare, something big is coming. That's why we're seeing the whole precious metals complex moving higher.
Yeah, got it. Let's look at Oracle. Oracle's been popping up on my feed a lot. Obviously, they came out with the news of partnering with ChatGPT, and it's been just it looked like a bloodbath right there.
Yeah, I mean, it had this huge move up earlier in the summer. It's just been selling off. I mean, everybody's trying to partner with ChatGPT, with OpenAI. I mean, I think it was Disney or Universal Studios or somebody else was trying to partner in with them as well. Everybody's just trying to rub shoulders with AI, and it's kind of like the precious metal space right now. If anything says the word mining in it, it's going higher. And everybody's doing the same in the AI space. Just rub shoulders and make some deal of some sort with some AI company, and money will flow towards you. But I think that is starting to come to an end in the AI space. Oracle, everybody's just trying to connect with OpenAI because it's like one of the biggest, strongest companies out there when it comes to AI. They've been around the longest. So, I'm not a fan. I think the AI bubble is slowly coming to an end.
Yeah. Yeah, for sure. And that capital has to go somewhere. And so yeah, I could see it definitely rolling into the precious metals. Let's
Yeah.
go ahead and look at gold. So I've seen some of your recent targets on gold, and it's gotten me quite
Yeah.
excited. But yeah, just curious in what you're seeing here.
Yeah. Gold is like just trying to break through this kind of euphoric little peak that we had back over here. The chart is pointing to about $5,100, $5,200 per ounce. So if we were to just forecast that forward here, you can see we've got a pretty nice move to 5,100 and about $75 percentage wise from where gold is right now. It's about 18.5% to the upside. So it's really exciting. This is a very strong chart pattern. If we zoom out on gold and kind of look at all these patterns it's made over the last little while, it rallies, it has a pause, it rallies. It's just a series of these bull flags and pauses, and we're having another pause right now. And we had a beautiful play with this breakout and this move, and we might be looking to a whole lot of physical metals for longer term, but there might be another breakout trade here for about another 15% rally or so in gold, just as a short-term trade, just to pull more money out of the market, take advantage of this, and put a little more capital to work in this space. So I really like the precious metals space. I like gold the most, just simply because I find it the most accurate. The triggers, the way it moves, I find is much more comfortable. You can put more money to work. Silver's a little bit more volatile. But again, the whole precious metal complex is on fire, and there's big potential upsides in everything right here.
Yeah, for sure. So I'm curious if you have any thoughts on obviously we had the big banks come out with their targets and such, and there being some allocation shifts regarding portfolio construction and adding gold to portfolios and such. Does that typically happen, at the new year, or when does that typically occur, or is it happening right now? Is there a way to even kind of measure that, or outside of price action?
Yeah, well, I generally, when there's big moves, big changes in sentiment, like the banks now saying and advisors saying, "Oh, get gold." Usually, we're on the last stretch of that asset. They're usually the last to kind of get on board, the last people to try and push it. A lot of advisors don't really want to do much in gold because sometimes there aren't commissions or ways to earn money in it. But you gotta just be aware. I think when everybody starts saying move into precious metals, it's usually kind of most of the move has already been done. I mean, just look at the chart of gold. If we were to just squish this down, gold has had a massive move for the last several years to the upside. Mm-hmm. And now people all of a sudden, want to get into gold now. I mean, it's great for a trade, but as a long-term investor, I think you're gonna have to weather a storm. I think we're gonna see some pretty big volatility over the next year or so in the markets. And I think gold could be back where it is now. It could actually be $1,000 lower than it is right now, looking forward 12 months. I think there's going to be that kind of volatility. But after that, I do think we're going to about 7,500, 7,400 in gold. That'll be the next upside target. But that means we have to go through a big rally and then a correction of some sort. And then, of course, it's going to go higher. So,
yeah, because I mean, if gold is doing well and let's say the rest of the market turns downward, then that becomes like the source of liquidity for many investors and such.
Yeah. So like here I have a monthly chart of gold, and we have the first super cycle here, or one super cycle here, where gold went into a multi-year pause and everything took off during the blue box over here in early 2000s. Everybody moved into real estate and stocks, and then gold shot higher and took off. Now it looks dwarfed because we've got these high targets, but gold pulled back 34%. It sold off with the equities market and with the economy. And then we went into a multi-year rally. And so when we fast forward to the new super cycle that started in 2019, we saw gold move sideways for several years. Everybody moved into stocks and real estate. Now gold has become that shining warning sign that, hey, it's money's flowing here. I do think gold is going to push up to around 51, 5,200. And then I think we're going to see the music stop. I think we're going to see difficult economic data come out. We're going to see the stock market sell off. I think we'll see gold pull back very similar. I think we could see it pull back 25, 35%, which brings it back to around $3,400 an ounce. And then from there, I think we'll see the next target after that will be somewhere around $7,500 per ounce. That's the first target, but it could go a whole lot higher after that target, obviously. But I think we're coming into a similar price action as 2007, 2008. We're seeing money and sentiment moving into all of the assets in the precious metal space in a similar way. Now, it's different data and different news, but price always does the same thing. It goes up or it goes down. They're either people are greedy and they want to make money, or they're scared and they're selling. And so it doesn't matter if there's what the Fed's doing, if central banks are buying something, price is still going to just move up and down based around that move. And a really good example of that is if we take a look at this year, Darrell, the 2025 tariff sell-off, and this is the QQQ. The market sold off. And we avoided the crash, and then it started to bounce, and then it actually turned into a rally, and we played the upside. Well, that was a tariff-driven move, very different. We haven't had anything really like that before. Well, take a look at these two charts. The top one is the tariff one we just went through. The bottom one is COVID 2020. Very, very similar price action. The stock market does the same thing. It goes up with greed. It goes down with fear. Every time it does it is for a different reason. It's a different economic environment, but price doesn't know the difference. All it knows is people want to buy me, I'm going up. People are selling me, I'm going down. And that's what I focus on. So all the analysis I'm giving you is based on technical analysis for precious metals and cycles, historically, how things have moved, what the charts are saying now. And I take out all of the noise between central banks and conspiracies and manipulation, because there's nothing you can do about any of that. There's always going to be some of that in the market. That's part of trading. You have to dance around whatever manipulation there might be. There's no point in complaining and kicking and screaming about it. So that's how I look at these markets. And I believe there's some really good upside across the board in precious metals, but I do believe they will get hit and pull back to a point where it'll be one of these epic opportunities, very similar to, if I pull this chart up again, you'll see here, I think after we have this pullback, after this red box, we're going to go into a multi-year move where that's when you can reload the boat for the start of a new massive super cycle. That's where I think you can make really, really big money, because it's going to last for many years, and we're going to see gold go up another 100, 200, 300%. Silver will probably go ballistic as well. But right now, we're just trying to squeeze a little bit more profits out before we probably hit a roller coaster kind of ride to the downside.
The copper market, of course, is the biggest metal market on the planet, 200 to 300 billion globally of metal traded. Following majors around and picking up projects that they jettison can lead to great success in this business. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
Yeah, that's important that you mentioned the technical charts, because everyone's looking at these charts, right? You have institutional investors looking at them, they're looking at the resistance lines, same resistance lines. They're looking at the same support lines. And so prices definitely matters when it comes to the charts, regardless of what's happening underneath the hood that's causing the price to move. Like you can pretty much see where things are likely headed based on these charts. So I appreciate you sharing that. Yep. Could we look at silver?
Sure. Silver's on fire today as you and I are speaking, which is December 17th. It's up almost 5%. Big move. Silver has already broken out of this pause right here. Gold is kind of stuck trying to break out, but silver's already extended. It's already moved to the upside. It's breaking out again. Our target on here was about 68 and change, which we're probably going to hit that in the next day or two. And then we can recalibrate what happens from that level. But overall, silver's on fire. And this is one of those other signs that's telling us we're a little bit later in the mature rally phase in precious metals. Is gold has moved up very nicely for many years. Now everyone is piling into miners, silver, platinum, and palladium. When we see the volumes pick up in all of those, and pretty much any stock that has the word mining in it, could be copper miners, could be base metal miners, this is usually what happens near the later edge. Later stages of a rally, they say, okay, forget the boring thing that's worked really well in the past, gold. Now I want to move into silver. I want to move into miners, things that move faster, and that's what we're seeing. And so that's why we're seeing silver break out. It's a tiny market. There's a bunch of people wanting to get in and take advantage of it, and they're all moving to the fastest moving metal or stock. And that's that's why silver is leading, I think, right now. And it's a good thing. I think silver's still going to rally. I think it could rally to 71, 72, maybe even into the $80 mark as it peaks out, probably with gold at roughly the same time. So that's what I'm looking for.
Do you have any idea of what that move upward could look like, as far as when gold pulls back, then it becomes the buying opportunity again? Because we see that in the 2008 timeframe, silver did the same thing before reaching a new high.
Yeah. So wherever silver tops out, we could grab a couple levels. So depending on how we want to go, if we take this kind of low right across this level here, and wherever silver peaks out, say it peaks out at 68, somewhere in here. Well, I think it's going to go to around 72. I think that's kind of where it could blow up and kind of shoot higher to maybe into the 80s. But let's just say 72. There's a natural pullback level around the 38% retracement to a 50% retracement. So we could see silver pull back to $50 or $43 an ounce. It obviously would be a substantial pullback. If we take a look percentage-wise, that could be, a 30, 40% pullback. And that's pretty normal for a move. I mean, a 38% retracement is very conservative. It's actually a very bullish pullback. If you pull back to that level and then it starts to build a base and starts to move higher, that is a very strong symbol. If it moves to 50% pullback, it usually is going to struggle a little bit, take a lot longer to get back up to all-time highs. And if it pulls all the way down to the 618, a lot of damage is done, because based on the Fibonacci theory, if you come down to the 618, the first measured move target ends up being right at the previous high. So you end up putting in a bit of a double top. So I do think once, we've broken through that $50 mark, now we're going to see silver have a blow off top wherever it tops, in the 70s, in the 80s over the next month or two. But then I think it's going to be stuck probably above the $50 mark. We've been stuck under the $50 mark forever. When we go back and look at historical price action, you can see here we've been, let's rescale this. We've come up to that 50 mark, or close to the 50 mark a couple times. It's sold back. I think now we're going to be stuck above the 50 mark, above these previous highs, or above like the 44 level. So I think silver's hitting a new pocket of price to stay in and hold up.
So by nature of silver being more volatile than gold, so you mentioned gold potentially having a 30 to 40% pullback. Do you think silver's pullback could be more violent than the gold pullback?
I do. I mean, when you look at some of these other pullbacks, they're like 88%, depending where you want to grab them, 70%. So there's no doubt, like even in 2008, when the gold pulled back 34%, silver fell over 60%. It's just a really fast moving asset, right? It's more speculative. And in general, something that's more speculative is more volatile, which means it sparks more emotions, which means, and this is the number one problem with traders and self-directed investors, is emotions get the better of them and they chase prices. They buy high and then they panic out as it sells off. They make difficult emotional decisions. And so it creates more volatility, bigger gains, bigger losses, these volatile assets. And so I do think eventually we could see a fairly big pullback. You could potentially come back all the way down to the 27, which nobody wants to see, but that's what's happened, in the past many times. A lot of people are going to say this time is different, which every time it's different. But definitely the central banks loading up is obviously a big concern that people know something that the general public may not, although we already know everything's corrupt and broken. So physical metals is a good store of value compared to fiat currencies. But There will be a
Yeah.
bigger percentage pullback, probably nearly twice as much of gold. And the question is just where is the top and how does price play out over the next few months here?
Got it. Yeah. Thanks for sharing that. So are you offloading any silver at this point, or I know you stack the physical metal.
Yeah. So I'm looking. I'm getting ready to. I have Sprout on speed dial. So I'm not there yet. I have talked to them. I'm like, just make sure I have everything set up. So when I want to just, start to liquidate some of my physical metals, it's super easy, which it is. It's just a quick phone call. I haven't sold any yet. I'm waiting for the blow off move. We're still actually in a full on rally mode, right? Like I'm excited about higher pricing. I want to see higher pricing. But when things start to, when you cut the air with a knife with the sentiment, and if you say one little thing negative about precious metals, you get your head sliced off. We're not quite there yet anymore. Believe it or not, we actually had that scenario, right? We had that when gold and silver were trading right at this phase here, not that long ago. So we had gold hit our measured move target right here. And this phase right here was a crazy FOMO phase. And I was telling everybody, I'm like, listen, we're about to see some sharp pullback because everybody is going nuts right here. Everybody's piling in. It's the crowded trade. And if you say one little thing about metals, you're a dead man online, right? Mm-hmm. And so then we had that correction. And so now we're nowhere near it. The market has just cleansed itself. And now we need another big run, which is about an 18, 19% run in gold, which is probably, who knows how high that is in silver. But we need to get back into this euphoric phase. And you and I have touched on this a few times in the past, the market participant emotions here. We got to get into a euphoric phase and then it creates a sharp drop. And the question is, is it going to be the start of a bigger sell-off or a bull market? And so the euphoric phase, I have tools and indicators and ways to identify this. And when we see it, man, it is like, get ready, manage your positions because things turn around on a dime. Price can drop and collapse. But no, I'm not selling my silver yet. I'm still holding on to it. I'm still thinking we're going to make a lot more on it.
Yeah, I sold a little bit the other day. I was sitting on some good profits, and it's just like, why not take a little bit off the table,
Yeah. We're long silver with one of our strategies as a recent trade. And, we got some good upside targets from here still. We've locked in some profits already as well on it. And now we're just letting it run, let the trend do the work, right?
I actually sold some of the physical metal and then I bought some call options, and so we'll see how that play out.
Nice. I think that'll work out. Yeah.
So I'm like, hey, I could cash in on the physical metal, and then potentially cash in a lot more on the options. So we'll see how it works. Yeah. So let's look at platinum and palladium. I've been hearing about platinum and palladium. Obviously, platinum specifically has been moving, and I mean, this market is really, really tight. So silver market's smaller than the gold market. Platinum market's very small. A lot of its production's coming out of South Africa and Russia and I think Zimbabwe. And many of those countries, people may not want to park the capital in. And so it's kind of interesting seeing what could happen with platinum.
Yeah. I mean, platinum's been on fire. It has been a kind of a dead commodity for a long time, for a decade, and now it's popping and coming back to life. And that's what a lot of commodities and specific some assets do, right? They go dormant for a decade and they become like nobody's interested in it, and then out of nowhere they just shoot higher, and they become the shining star that rises from the ashes. So we're seeing platinum back up near some highs that we saw back in 2011. It's had a very strong run. I think everything in the precious metal space has had a very nice run. I think there's a little bit more to the upside still. But again, I think if you're like, depending on the style of trade and your time frame, I think it's a trade at this point. I wouldn't go buy a bunch of bars of platinum or palladium or precious metals here, to be honest. I'd do exactly what you did. If anything, I'd be going to just the ETFs, the leverage ETF or options as a trade, a very targeted trade to catch an explosive move, get in, get out, and be like, I got some more extra juice out of the metals move. So the fact that it's up here at resistance, I think it could go a little bit higher. We might see it blow off up into the 2300 mark that we saw back in 2008. But I don't follow platinum that closely. All I really want to track is money moving into all precious metals, or is it very specific? And we're seeing money move into all precious metals, which tells us we're in a bullish phase. And now that we're seeing money start to move into some of these more lucrative plays like platinum, palladium, and silver, and gold is kind of underperforming, is telling me that we're just in this late mature point that metals to me here are just a trade. They're get in, lock in some gains, protect your capital.
Mm-hmm. Yeah, for sure. Yeah, I've been kind of wondering, okay, what is the signal for platinum? So like, just thinking about, I grew up 90s, early 2000s, right? And in hip hop and rap music, platinum was huge. And you can see, you look at the move from even the the first decade of the 2000s. Yeah. You could see that type of euphoria creeping over into these other aspects of like music and culture. So yeah, I'm kind of thinking about, okay, what if it comes back? If it comes back to hip hop and they're talking about it a lot, we may be at a blow off top phase or something.
Yeah, it's funny because I think our generation, the older generation, you think of platinum as like being really high priced, right? It's more valuable than gold. It's like, oh, I got the platinum. I'm like, well, it's kind of like gold, not platinum.
Yeah, I had a friend of mine. It was funny. He was telling me. He's a big hip hop head, and he had a platinum chain, and then he paid a lot for it, and then he went to go sell it, and they wouldn't give him as much money as he paid for it and then he asked why, and they said, oh yeah, the metals are down. I said, oh, you must have sold it around 2012 or something where the blow off top happened, because definitely could see that.
Yeah.
All right, so let's look at oil. So oil and gas is probably one of the most unfavored sectors, and I'm just curious what you're seeing here.
Yeah, I think we're about to see oil have a pretty big pullback. I think there's a very critical pivot point on the chart around this, $40 per barrel. That's going way back in time. I mean, we've seen this hit many, many times before. If we zoom in on the current chart, let's just actually move to let's go to the daily chart here. Oil's definitely struggling. It has come down to a very critical short-term support level around $55 per barrel. It's been in this sweet spot. It comes down here. It finds these very strong bounces each time. Yesterday or the previous session here, we saw it come right down, test this level, kind of pierced it by a little bit, and now it's starting to rebound. I think it's going to try to find some support here. It might have a little bounce or trade sideways for the next week or so, but overall, it looks like it is going lower. When you zoom out on oil, I mean, it's just been going down for years. There's a lot of pressure and selling. There's all kinds of news going on in the space right now. I think it's a leading indicator that the economy is slowing, that there's going to be less demand. And I think we're going to see oil probably around $45 per barrel, maybe in the next month or two. I think we could see things change. I think we're going to see some news come out here soon that is going to kind of explain why oil might be going down to some regard, or like it's going to be some poor economic data. I think that could be like, oh yeah, things are definitely slowing. That's kind of my take on it. But the charts are pointing to about $45 per barrel over the next month or two, and they're on the verge of breakdown here.
Yeah. So at what point would you be interested in loading up on oil if you were looking at a trade? What levels would you be?
I'm not really interested in loading up
that risk
or buying it. If anything, it would be more so, I'd be more interested in buying an inverse ETF on it. If it breaks down and has a bit of a bearish pause, it could be more of an inverse ETF. So as oil falls, the oil ETF goes up in value. But this isn't the type of play that I'm looking for right now. We have a lot of mixed signals because the stock market is still up. It's still in a bull market. Oil's going down. So we've got divergence. And it's a really critical level here. I don't really like to trade something long or short while the market's long. So if stocks are up, I don't want to buy anything short too much. Usually if the stock market is down, I'll be looking for shorts. I'd be interested in playing an inverse ETF on oil. But at this point, I just like to watch it. It's not something I trade very often. I used to trade just gold and oil. I used to be the gold and oil guy. And all I traded was gold and oil, and I used to day trade the Dow. That was it. Now it's like, I never trade oil. I never trade the Dow. I never even look at the Dow. It's amazing how your times change and you find value in different things and different ways to trade. But I think if oil gets down to 45, I think it's definitely going to have some type of bounce at that level. But again, I'm not looking to trade bounces or breakdowns at this point.
Yeah, I mean, the chart looks depressing. And I do think it speaks to like some of the sentiment around it as a investable asset. And so, I mean, if we look at 2020, when people thought oil was dead at that point, and we did have a violent move upward over the next couple of years. And so, for me, like being a little more on the contrarian side, if a lot of people were running to one side of the boat, obviously, I kind of see this like, okay, is this an opportunity, that, could pay off in the longer term, the longer term, 3 to 5 years or whatnot. So that's kind of how I've been thinking about it.
Yeah, I think if oil drops to 40 or 45, it could be a really good long-term play to buy. But I don't buy and sell based on long-term buy and hold strategy. I think if oil gets down to those levels, it'll be a really good technical level for finding support. Yeah,
definitely. Okay, well, yeah, let's end off on copper. Okay. Yeah, so copper's been moving on the move. So curious what you're seeing here.
Yeah, I don't follow copper too much. It's not my thing. It's just not something I really follow. I mean, it's been moving up with precious metals. Let me just zoom in here. It's a little bit noisier of a chart. Obviously, we had the whole tariff thing, a huge pop, huge drop, all kinds of noise in there. It has it's trending higher, but it has kind of an ugly chart pattern. I do think it's going to want to move higher with the precious metal space in general, simply because all the moving averages are sloping up. It has a series of mini little bull flags. It has a bigger bull flag. And it's broken out of that, and now it's having a pause. And I think it might want to run back up to $5.87, back up into these highs. If we can get a quick little gauge of just this recent move, depending where we draw it, it's going to bring us somewhere up to $5.85, which it brings right into these previous highs. So I think if copper gets up there and your long copper miners, your long copper ETF, whatever. If it gets up to there, I'd definitely be looking at locking in some gains, moving your stop up, because it could have a very sharp pullback. But again, I don't know the copper space too much, and I've never really liked the copper charts, just the way they move. I like to stick with things that are a little cleaner.
Yeah, look, I mean, those are some violent corrections along the way.
Yeah. When you trade, like it's the same with natural gas. Like you have to have a very very good trading strategy, how to protect your positions, how to do all of that stuff. And if you don't, you'll hit one of these red bars where it's a giant decline and you'll just get your trade wiped out. So if it's silvers like this, natural gas, copper, you have to be really, really good at trading. And a lot of people lack a strategy, and even more people lack discipline. You need them both to survive if you trade stuff like this. You need them both to survive the markets in general. But
Yeah. So at the Technical Traders, you all have strategies and such. And like you and I, we've been talking for a while. And even though in your personal view, you believe that the market is overheated and due for a pullback and due for a major correction, crash, whatever, however you want to frame it. But even though that hasn't played out fully yet, you're still making money. You're still, engaging in some of these shorter term trades or whatnot. And so could you speak a little more to that strategy with your personal view of the markets being overheated, which the data confirms that? You look at the Buffett indicator, all these other indicators show that the market is, very overheated, AI bubble, all of that, but you're still making money along the way.
Yeah. Yeah, you make a very good point, Darrell. I'm starting to get this label because every podcast I go on always says like crash is coming, epic, like the top is here, like I'm painted as like a perma bear, right? So people think I have a bearish outlook, as you said. I do think we're coming into something big, and I'm saying that because I'm a defensive trader. I want to protect my capital. I want a game plan so that when this happens, I'm not just hit upside the head and I take a beating and I go down for the count, right? I want to be able to defend my money, protect my portfolio. And so, yes, we continue to be long the equities markets. We're long precious metals. We're making money as the market goes up, even though I'm screaming the sky is falling and something bad is coming. And that's the difference, right? A lot of people will scream the sky is falling and they put on bearish trades and put options and they buy inverse ETFs because they're like dead set that this market can't and shouldn't be going higher. Well, the market can do whatever it wants to do. Like, who would have thought oil could go negative, right? Yeah. So that was my biggest wake up call in trading and investing, was watching oil go negative. I'm like, okay, so really anything can happen with price action. So you better have a strategy to manage price and your position. So that's what I do. I trade ETFs, 5 to 12 trades a year. We grow our account no matter which way the market goes. We're protected on the downside. My strategy works like a portfolio insurance plan. We're not going to take a beating when the market rolls over. And on top of it, we're going to probably profit and become wealthier than ever as the market falls. So it's kind of like an insurance plan and a strategy wrapped into one, gives you peace of mind. That's what I do. I just manage my own portfolio, and members, we all trade them together. We copy and do the same trades.
Okay, got it. And so those trades are, you mentioned ETFs. So are you mostly looking at the SPY, QQQ,
yeah, with TLT, the US dollar ETF. We do the occasional side trade like in gold or silver or Bitcoin as like a bonus little trade to etch out some quick gains. We did a trade last year in Bitcoin. It was a 40% gain. We did a little one in gold a couple months ago. That was a 15% gain. So we put on these extra little side trades, but my strategy is designed for your entire portfolio to grow and be protected. And then, a lot of people will always trade whatever they're in love with, all these other asset classes, with a portion of their own more, aggressive trading accounts. Mm-hmm. And so I just help people manage and protect their nest egg while they go out and trade on their own more, faster moving things.
Yeah, for sure. And is there any type of level of capital someone may need to get involved with this service, or is it kind of just like, hey, whatever you got, these are the trades we're putting on, and then you decide whether you want to follow those trades or not?
Yeah, I mean, obviously there's a subscription fee. At this point, it's $3,000 a year. So you need an account that makes it feasible to trade. So I would say like, $100,000 account would kind of be the minimum. So we make, on average over the long run, we've made around 13-14% a year. And so, if you take away, say, 3% on a $100,000 account for the $3,000 portfolio, you're still above the average growth, but you have all the downside protection. Obviously, if you've got a bigger account, like the people I can protect and help the most are those who have significant trading accounts. They have, a lifestyle they do not want to lose or have to downgrade.
Yeah.
So obviously, the more money you have, a lot of, subscribers, used to be paying $30,000, $50,000, $70,000 a year to an advisor. And now they can, navigate these markets, for a few $1,000s and have it auto traded for them. So it totally varies, but you kind of need a bit of money to make money, right? So
yeah, for sure. Yeah, that's good. That's good to know. Well, yeah, I appreciate you for coming on the show. Where can people connect with you? You have a YouTube channel, you have your service, your website, and all of that. And so just go ahead and plug the audience.
Yeah, the best spot is go to YouTube, The Technical Traders. You'll see my channel there. I share videos each week. And then, of course, if you want to copy my trades or get on my free newsletter and stay up to speed on the markets, you can go to thetechnicaltraders.com and sign up to the free newsletter. And once you see what I do, if it jives with your style and mindset, or you've got capital you want to protect, then you can make the leap and subscribe.
All right. You all got the information. Also, be sure to hit the subscribe button here to VRIC Media and click the link that is pinned in the comments. That is to the Vancouver Resource Investment Conference, where yours truly, as well as Chris Vermeulen, will be there live in the flesh. And so definitely looking forward to meeting you in person and connecting with you there as well.
Yeah, sounds great. Take care.
All right.